So I'm going to proceed from where I ended in the previous episode. We talked about the voids, and today I want to conclude the part of the voids, and I believe today it will be so beneficial. Uh, and then we shall see. So as of yesterday, actually today I'm not going to use much of TradingView because I have some analysis that I made that is running, some setups that are running. So TradingView is cluttered. Let me go over here on MT4 and I show you something. So as of yesterday, actually it was yesterday, uh, we identified voids as gaps in the market, to put it simply, as gaps in the market, or fair value gaps based generally. So first way, let me let's say use this. So we identified them as gaps in the market. For instance, we have this candle over here that has a gap. But if you're to compare this area here, we can see that these candles were running into each other. You cannot see any gap here. There are no fair value gaps over there. You get? So those voids, I told you that normally the market comes back to fill them right away. You get to fill them right away. But then those are not the only voids that we look at in the market, the fair value gaps only. We also consider, let me illustrate something to you. We also consider something like this. If at all the market is moving, let's say in a bearish market like this, you get, and then let's say something like that. Normally we can see that it creates some kind of a trough. You get this space here. You get. So what does the market normally do? Is that we normally start to see that the market starts to move up like that, and then covers up that gap. You get. So this is also a void. You get. This is also a void. This space here, this bare space that you're seeing over there, we can also call it a void. So sometimes it can help us to determine our take profit points. You get, it helps us to determine whether indeed the market is going to go that in that direction or not. You get, for instance, let me show you here over on here on TradingView. So we can see that the market moved in this area. We moved let's say like this as you're saying. So the market created this space that you're seeing. So in the movement back down, you get, we can start to determine where, first wait, let me change the color here to white so that it's visible, and let me make it 2 pixels. So we can see that we can determine as we get a reversal, you get, we can determine this space as our take profit point. You get, or when we get a reversal, it can help us to determine this one to be our trading range. You get, from this point to this point. So when you get a reversal, then we can start trading from that point. But this color is not really visible for me. Let me go back to purple. So we can start to determine that from this point, let's say up to this point here, is our trading range. You get? So, or let me use this. So if at all our void started from here up to here, you get? So we can start to determine as we are reversing back this point here where we started to be our take profit level. You get, or our trading range. You get? So those ones become voids. So if I come here on MetaTrader 4, we can say that from let's say from this point up to this point where we got a change of character, you get, this one can become our trading range from this point to this point here. So as we got the reversal, you get, by the break of this structure here, then we can see that the market has come, it came, it filled up half of it. You get this half of this gap. By the way, I think in the next episode I should talk about the discount and premium. You get, how we determine the discount and premium. If at all we choose a trading range, let's say up to there. Let me change some colors here. Let me change some colors here to white. So in case we have a trading range from this point to this point here, you get, sometimes the market retraces back 50% and then it buys again, you get. So in this upper part, when we get a change of character, or when the market reverses, then we can start look for points of uh, areas of supply for us to sell. So it gets risky for us to sell in this part of the market when, if at all this is our trading range. That's why you normally find that when you sell below 50, below equilibrium, most of the time you're going to run into problems of hitting the stop loss. You get? So below 50, most of the time we are going to be looking for points for us to buy. You get? And we shall be looking at all that. So I just encourage you guys to endeavor to subscribe. You get? So we are seeing also, let's identify these voids. We are seeing there is a void here. You get? And then the market came and filled it up. We can see that we have another one. We have another one over here. The market tried to fill it up, but then it didn't fill up the whole of it to take out this high. But then at least it helps us, if at all we can see that there is a trough. Let's say here on MetaTrader 4, I don't have any tool to use. If at all we are seeing from this point to this point, there is an empty space here, you get. So we start also to look at some points of interest here. I'll be showing you later episodes. We can start look for points of interest where the market is likely to react, you get, where it is likely to react, not forgetting that this one also becomes our point of interest where the market could react, you get, where it could react. So it can reach there and then it sells, you get. But then we can have several. So given that this, by the way, this is H4, if I totally have some good points of interest on a higher time frame, so now here I can come on M15 and I trade with no worries. That's why, by the, it's one of this analysis that you're seeing here, this setup that is running, I did the analysis on H4, you get, on H4. So generally on the on Nasdaq or Nas 100, I've been bearish, you get, I've been bearish. So on lower time frames, I can look for selling opportunities. I look for more selling opportunities. So which means most of the time you're going to find that the market will be reacting to points of supply and then we break demand. So most of the time you're going to find that demand is breaking and then supply is holding. You get, supply starts to hold. So if we head back here, so now that's it. Now this is my H4 point of interest. Now in later episodes, in episodes to come, there's something that I really want to introduce, but then we can see that if at all you have this as your point of interest, now we are filling up this void, at least for this trading range. Is it possible that the market could continue lower? Yes, it doesn't matter. This is a big time frame, you get. So if at all we reach here, you're going to find that now we are creating a void from this point to this point. You get something like this. Let me show you. So we are creating something similar to this. The market has been selling, so it's doing something like that. So there is a high chance, that right now when you reach here, there is a high chance that the market will reverse in this kind of manner, and then we start to see the market moving up, you get, and then it fills up this void, or it can even go higher, you get, it can even go higher, you get. So here for me on lower time frames like the M15, what I do is that I start look out for order blocks, you get. I start look out for order blocks. The market tends to react to order blocks. These become points of for me to look for selling opportunities. This is M15. Likewise, yesterday the market was breaking below. It breaks below, and then we look out for reversal points. You get, reverse areas of this one here was the perfect one, you get. So we tap there and then we sell, you get. So that's it for now. I encourage you guys to subscribe, and then you can write in the comments below of what you want me to talk about next, or you can text me on Telegram. The link is going to be in the description. You can text me there, and then maybe you suggest what I can talk about in the next episodes. I wish you the best.